That's just a clarification coming in, but we are getting back to the markets. With that, we have George Thomas, fund manager at Quantum AMC, joining in now to talk about fundamentals and how we are placed. George, great to have you on the show. Thank you for joining in. So bulls feeling good because we're practically sitting at our all-time high levels, almost there on the Nifty as well. But you tell us, I mean, this earnings season has definitely been better than what we saw in Q3. Just in terms of the big themes, the big pockets that you're most optimistic on, tell us, what are you liking in the market at these levels?
Yeah, like you said, earnings have been much better than what most of us expected. And fundamentally, because last 2-3 years, what we have been seeing was most of the economic growth was contributed by the premium side of the market. The mass segment was kind of muted for a long time now. But with inflation kind of moderating, we are seeing signs of even the mass segment kind of participating in the economic expansion. So that should give some support to the earnings in the medium term. So we are seeing early signs of that even in the two-wheeler volumes or even volume growth in consumer staples. And across board, the input prices are kind of moderating. Even that would support a margin expansion in the medium term. So these should, kind of lead to a reasonable earnings growth going forward. As far as valuations are concerned, they are more or less around the fair zone. So most of the upside would be contributed from earnings expansion from a broader market perspective. Of course, there are pockets of opportunities. So among the sectors where we are overweight in financials, consumer discretionary, primarily the two-wheeler space, and technology continues to be an overweight position for us.
Technology is an overweight position for you?
Yes, right.
Okay. Particularly, George, in the technology basket, many of these ER&D companies like engineering, research, development, the likes of Cyient, Tata Elxsi, of course, has done quite well. KPIT Tech has been a discovered play. Where do you stand on further gains in ER&D companies? Because these stocks have done quite well.
Right. So as far as ER&D is concerned, primarily you would see a huge uptick in their growth profiles when there is a technology transition. So when there is a new phenomena like, let's say, the EV, or when there is a transitioning phase, you would see a fairly high growth rates. So what we have seen historically is it's very unlikely that those kind of growth rates kind of sustain for very long periods. And most of the times, markets kind of account factor valuations, assuming that these growth rates persist for a fairly long period of time. So from a valuation perspective, the ER&D pocket looks a bit expensive. But of course, from a longer term growth perspective, there is a scope for decent sustainable growth, but may not be at the pace what we saw in the last 2-3 years.
Okay, got that. George, thanks a lot for joining us. This is Pavitra. For the Q4 earnings season, one pack which really stood out is this entire auto sector, right? I mean, did very well. We had the May sales last week, which are all looking quite solid. Do you think this space is ripe for fresh investments?
Yes, if you look at the two-wheeler volumes, they are still down or almost at very similar levels to what we saw in FY19. And whatever volumes which have come up in the last 2-3 years, they have been more in the premium segment. So going forward, we feel even with inflation kind of moderating, the mass segment or the bottom of the pyramid should be in a better position in terms of their consumption spending. And that would reflect in volumes for companies which are focused on mass segment. So even that would start contributing to the volume uptake. And therefore, from a next 2-3 year perspective, there is scope for earnings growth, a decent earnings growth from a sectoral point of view.
Okay. George, just to go back to the beginning, you said that you're overweight on financials, IT, and also consumer discretionary, right?
Correct. Consumer discretionary is majorly contributed by two-wheelers.
Okay, by two-wheelers. All right. I was going to ask you about the other pockets of consumer, because that's where there's some concerns on demand. So let me come back to financials, since that is your big overweight position. Can you share some more details? I mean, is it banks? Is it more NBFCs, MFIs? I mean, microfinance players have done really well in this quarter. What part of financials do you like the most, and why?
Yeah, so we have been, our positions are majorly in large banks and a couple of NBFCs where they have a certain niche skills or certain very clear differentiation from the mass. So banks continue to be in a very favorable cycle. Of course, we might see some bit of moderation in their net interest margins and those profitability margins. But from an economic cycle perspective, the cycle is pretty conducive in terms of to support the credit growth for banks. And even the overall liquidity in the system has kind of improved. And even that should ease some bit of pressure on the cost of funds side. So overall, the corporates have deleveraged over the last few years, which makes them in a decent position to lever up their balance sheets. Plus, banks are sitting at good capital levels. And even as the mass segment at the bottom of the pyramid starts contributing to the economic growth, we should see credit growth sustaining at decent levels.
George, we'll leave the discussion here today. Thank you very much for joining in. Need to get into a break. On the other side, we've got a corporate conversation going. Dipali Goenka, MD and CEO, Welspun India, will join in on the other side.